Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Tuesday, November 25, 2014, looking at a daily chart of the SPY. And we had pretty much another nothing day, just like we did yesterday. And yesterday I told you that today was a cycle day, which should have produced a down day, and the S&P was down a little over 2 points. The Dow was down a little over 2 or almost 3 points, and frankly, that doesn't count. And I think one of the reasons why the cycle didn't play out, and as you know from yesterday, from the video, I was kind of skeptical that that would even happen because of the Thanksgiving week holiday and the light volume and so forth. Well, one other thing came to my attention today, which somehow I just wasn't aware of, which was today was a global rebalancing of the MSCI indexes or indices, which is just a basket of or a bunch of ETFs that are global based. It could be anything from Europe to Asia to emerging markets to developed markets, and all those indexes were basically rebalanced today, and that could have been the reason why. Certainly, when indexes like that are rebalanced and the big institutions are doing their rebalancing, they certainly don't want to rebalance on a down market, so they hold the market up, which is very easy for them to do with light volume. And the SPY or the Spider had, what did we have in volume today? We had 79 million shares, and I'll bet you probably 20 million of that was due to the rebalancing. So it was really another light volume day when you subtract out the rebalancing, and that's not unexpected anyway. So we didn't really get the down day, but nevertheless, it really doesn't matter whether we get a down day tomorrow or Friday. I think a correction is going to start in earnest on next week, which is December 1, and last for anywhere from 6 to 8 or 9 trading sessions. And I'm not looking for a crash, or I'm not looking for a debacle. I'm just looking for a pullback, and it's basically going to provide us with a setup to where we can buy off the laundry list that I've been telling you about, that I'm building, specifically in a lot of the energy complex and some technology names I've got on my list now. So we're going to have some fun on the upside when it does take hold around the middle part of December into next year, and we should see a nice rally going into the Christmas holiday and New Year's holiday. So all in all, there was really nothing going today. I mean, if you look at the 10-minute chart, the market was basically just chopping around up and down in this range all day long. Nothing going on. There's really no way to trade a market like this from an S&P perspective. There are some stocks that are moving, and you could take some day trades in stocks if you're a day trader, and that's fine. One thing that I did find is interesting, which I'll show you right now, was Apple. With the market not being down today, and I don't count 2 points as being down, Apple put in a nice little sell day here, and it basically happened at the end of the day, which is normally a bearish sign. Okay, you see what happens. It kind of hit it high in the morning, and then it melted away. And then, in the afternoon, we kind of sold, tried to bounce back and sold off again into the end of the day. That's not necessarily a healthy sign. And granted, it wasn't a big sell-off. It was less than 1%. It was 86 cents on Apple, which is nothing. But the point is that a stock like Apple normally wouldn't be down on a day like today, on a light volume day. It normally would float up like it's done the last several weeks. So I don't think I'm going to not make much of Apple today, but I will tell you that I'm watching it because it normally will be, or it should be, a market indicator. And if this was the sign of the first crack in the armor, so be it. I'm just paying attention, and that's all I'll give you on Apple. So the IWM, which is my other favorite indicator, was basically flat. It was up 10 cents. That's nothing. And so we'll watch for any kind of sign that the IWM is weakening. And if Apple's weakening and the IWM is weakening, we should see some other stuff begin to weaken. And I don't really anticipate much of a sell this week, but nevertheless, next week I do. And I don't think it's going to be large. I just think it's going to be a corrective move in the market to correct the last up move. And if we just go back to the SPY, I'll once again go over what I expect. Let's go to the daily. Okay. So as it stands now, Your first target would be somewhere around the 200, 201 level, and maybe even 202 if you came into this pivot high. And then that would coincide with somewhere in the neighborhood of 2000 to 2010 or 20 on the S&P, which isn't much of a sell-off. But then if we crack that, then the next level would be the 50-period moving average down here at 190, call it 198.5 by the time next week rolls around. So that I'm going to stand by that until further notice, but we'll have to see how the correction unfolds, when it unfolds, and then I'll give you more information as time goes on. Okay, so let's go over to the gold market because gold was interesting today. Gold didn't have much of a move today, but so nothing's changed. I'm still looking for 117, 118, and then up to 120 to 121. I'm sorry, 120 to 120 and a half in this move if we can get up there. But I thought what was interesting was I'm going to talk about the gold miners, and we use GDX, which is an ETF that has a basket of gold mining stocks in it. Uh-oh, talking and typing. Whoops. Okay. So GDX had a pretty good move today, and it's not apparent as much on the daily as it is on the intraday chart. Now look what happened. Okay, this is, let's see, right here, let's go to this morning. This morning, we start up immediately. Okay, we go sideways for a while, and then all of a sudden, early afternoon, we start to take off, and then at the end of the day, we shot higher. And what that tells me, and I see this a lot with the gold mining stocks, it was up like 4% today, a little over 4%, this GDX. And what I find is the gold mining stocks tend to move before the price of gold or spot gold. So I think kind of the stars are lining up for a move in gold, and we're looking for a move in gold. And now that I saw this today, this is a good tell for me that I am expecting that move in gold we've been talking about, or I've been talking about. So we should see another $25 to $35 at least in the price of spot gold up. Spot gold right now, as we stand. Whoops. Spot gold as we stand right now is 1198.50, and we kind of touched a little over 1200 today a couple times, and then it pulled back. But I think there's got to be $25 to $35 or $40 on the upside in the price of gold. And when you look at GLD, all right, GLD, that's going to give us, that's a 10-minute chart, that's going to give us anywhere from $3 to $4 in the price of GLD, if that which coincides with spot gold. And guess what? $15 plus 4 is 119. So it kind of makes sense. What I'm saying is, we're looking for a move here to here. So anywhere in this area I'd be happy with, and I would anticipate that coming in short order. And that may coincide with the market selling after the 1st of December. And that's kind of the way I see it lining up right now. So I'm watching. I'll keep updating you on a daily basis, and we'll take it from there. Let's go over to the oil market. And oil sold off today. It was down almost $2, and it's down in the aftermarket session or the Globex session as well, down at 73.87 as we speak right now. And, maybe we are going to get to that 72 level I've been talking about. And guess what? If 72 doesn't hold, then we're going to go into the 60s most likely, 67, 66, something like that. But I'll keep you updated as that unfolds, if it unfolds that way. So on Thursday, on Thanksgiving here in the U.S., OPEC is having a meeting, and the scuttlebutt is, or the rumor is, that they're going to cut production in order to boost the price of gold. Now, here's the way that works, okay? OPEC doesn't cut production. They never cut production. They just say they're going to cut production. Everybody thinks they're going to cut production. They sell off the price of oil, and then it bounces back up. And that's pretty much the way it works. So any down move in oil, we're going to start to look for a better, more solid bottom than we had in here at 74.75, or coinciding with the current level of USO, which is about 28. And if we go lower, we're going to look for 27 and then lower beyond that in the price of USO. But, so you just need to be aware that OPEC's not going to cut production, but they'll talk about cutting production, and that'll cause traders to sell into the oil market, and which will drive the price lower. So that's what we're looking for in the price of crude. And I want to talk about one more thing tonight, which I haven't talked about in a while, and there's a reason. This is the 10-year Treasury. This is the 10-year interest rate. So the reason I haven't talked about it recently is because all we've been doing is going sideways. So there wasn't really much to say since we made this huge low here in October 15th with the market bottoming. So we had a sell-off in the interest rate today, which means that the bond prices moved higher, and they moved higher pretty substantially. And just as a proxy, let's look at the TLT, and you'll see what I'm talking about. Okay, so TLT had a nice little pop upward today, and if you look at the intraday chart, it's more pronounced. Here's a 10-minute chart. See, that was a big move today in TLT. Bonds typically don't move that much, and when they do, they're telling you something. So just like the IWM and just like everything else I use as market indicators, the bond market is telling me if interest rates are going lower and bond prices are going higher, money's coming out of the stock market, going into the bond market, and we should look for a pullback that I've been discussing in the stock market. That's pretty much the map as we see it. That's usually the roadmap that normally happens. So that's why I wanted to bring that up. And so we'll look for lower yields, slightly lower yields, and we'll look for higher prices in bonds in the coming days and week or two. Let me get that back up there for you. Okay, so this is let's go back to the daily, and so look where bonds went. That's a pretty good move in the yield. I mean, we went from a high today of 2.317 to a low of 2.26, which is a decent move. 5 ticks in the price of the yield is not a move that you should not pay attention to, or it is a move you should pay attention to, I should say, proper English. Anyway, okay, so that's pretty much all I have for tonight. I'm David Frost, MyStrategicForecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.